Hello and welcome to BQ Pram. I'm Hiral Dadia. Joining us on the show today is Mr. H.M. Bangur, Managing Director at Shree Cement, Decode Q3 earnings for us. Welcome to the show, Mr. Bangur, and a pleasure to speak to you as always.
Thank you. It
Right.
is yes,
Mr.
please.
Mr. Bangur, overall, in terms of the Q3 numbers, we've seen a strong volume growth that has come in. There has been a slight miss in terms of realizations go. Margins also are above what the street was estimating. Have the numbers actually met your internal expectations?
Yes. Uh, First, we were thinking that once the volume growth is there, then we can take out where the low realization is there. And once we have the power of the volume, if we reduce now volume by 5%, the realization will go up automatically, or we can work on it. First thing was no volume pressure. So it is quite heartening that our volume targets have been little more than what we had thought. We thought of 7.8 million tons. It has been more than 8 million tons. So
Hmm.
now in this quarter also, there will be equal emphasis on volume as well as little bit price rise. So price rise will start from this quarter.
Right. So overall, we are saying price rise in the form of realizations will increase, or are we saying that there will be a good amount of price hike that will be taken, or is it that the raw material costs, which are in lower, is something that will bode well? Because if you see in terms of fuel costs, there has been some bit of softening coming in there. Additionally, if you see in terms of the solar plant that you're setting up, the plan to use AFR, increasing production of blended cement, are all these factors going to help you, improve your realization?
Realization is independent of cost. They what you are talking, all these will things will matter in EBITDA earning. That will
Mhm.
also increase, but our realizations will definitely increase because of higher focus on premium products as
Okay.
well as reduction of logistic cost, because
Hmm.
the realization is taken after the logistic cost. So our realization, you will find that will start improving from this quarter.
Okay. And
And the
over.
other things that you said
Hmm.
are all true. The fuel cost in coming down, solar and renewable initiatives are there. They should reduce our cost of production. So margins expansion is expected. And this is irrespective of how the cement market moves, because our direction is for from our own way, that
Hmm.
realization improvement, cost reduction, and if the market for cement improves, that much extra gain will be there.
Right. So by how much are we expecting our realizations and margins to improve from here on?
We expect that this is the best season of the year for cement consumption. From February to June is the best season, and
Hmm.
demand will be good. So we expect market margin expansion should be there. How much is very difficult to say in a commodity industry.
Right. So overall, from a margin perspective, say right now, from below 20%, is it possible that in the next 12 to 18 months, we could see something in that 23-24% range, which will be then driven by higher volumes, better realizations, and lower costs?
Yes, we expect more than 20% in immediate future, not even 12 months, but
Hmm.
in 6 months' time, the margins will be more than 20%.
Right. Overall, from a price hike that you mentioned as well, now in the third quarter itself, we've seen a price hike that has come in. What's the trend right now? If you have to look at January and February, what has been the price hike so far, and how much more could be in the offing in this quarter itself?
Unfortunately, no price rise is there. The
Hmm.
increase, which was the trend, has come down because of the fuel cost, but price rise is not there. The January this year was abnormally cold, so the cement consumption was very low.
Hmm.
The price rise was not expected. Now, February onwards, we expect some price rise. So it can start any day, but till now, I don't see any price rise in most of the regions.
Right. And moving from here on, overall, if you see in terms of capacity expansion as well, a lot of it that comes on stream in FY 24 and 25 with regards to the integrated cement plant at Gotra, which is in Rajasthan, the clinker grinding unit, which is of 3 MTPA, which is in West Bengal, and the integrated cement plant in Guntur. Now, taking all of these capacities into consideration, in total, how much is the addition from the current capacity that we have?
These all three things will be 9 million ton. Right now, we are at around 44 million ton. So overall, in 1 year time, a 53 million ton capacity in India will be there.
Okay. And overall, from a volume perspective as well, you've indicated that we are looking to see double-digit volume growth in the fourth quarter as well, right?
Right?
So, taking that into consideration, how are we expecting the mix between premium and the non-premium part of it to pan out? Because currently, I think premium is still around 7% overall.
Yes. Premium, I was saying 8%, and
Okay.
it doesn't matter. And overall, it should be around 20% in 2 quarters. We will be
Okay.
moving fast. From 8 to 20 seems to be a very difficult task, but background work has been done and it should be implemented.
Right. And currently, what's the capacity utilization?
In this quarter, we produced uh, 30 million, 8 million ton, equivalent to 32 million ton per year. So capacity utilization is 72%.
Right. And I mean, do you think the utilization will be at similar levels in this quarter as well, but will inch higher in FY 24?
In FY 24, we think it will come to around 80%. In this quarter also, it will be more than 72%, around 75, 76% or so.
Hmm. Right. And overall, if you see, from a market perspective, from geographies that we are serving, where are you seeing higher traction, and where is it that there is still some amount of push that is still needed?
No, higher demand will be there. Uh, in fact, South India, we have done very well this year. And going forward, uh, Sou- in South India and South and West, our growth should be much higher. In East, we have also good capacity, which is underutilized. So there also growth potentials are there. North India, we are already above about 90% or 90% plus in this quarter. So good utilization will be there, but growth will not be seen as we are already at the peak.
Hmm. Okay.
Uh-huh.
And overall, what's the strategy going to be from here on? Because earlier as well, we've reiterated a capacity guidance of 80 million ton by FY 30, and that's almost going to be double of what we have currently, right? So is this going to be through organic routes, or will it still be through inorganic routes as well?
Uh, we will be putting our own plants. Organic routes will be the principal driver in the
Hmm.
process. Uh, some inorganic capacity, which we are not sure of, may come. We don't mind having it, but right now nothing is visible.
Right. And overall, in terms of the capex, how much are we planning to actually double this kind of capacity?
It will, as we go, about $120 per ton will be the cost. Why I have to talk in terms of dollar? Because many of the machineries are imported, so better, and the inflation also will take care. So we think $120 per ton. Sim- We have done our homework. We have enough cash, and in up to 8 years, even after putting up this capacity, company will maintain its cash flow. and will maintain its cash reserve.
Right. Overall, apart from that, if you see from a cost perspective as well, there is a lot of consideration that's been taken by the government right now to look into the cement sector plea to cut GST, right? So, what's your view on that?
If GS,
Taking, yeah.
cement is not a luxury product, so 18% GST in line with most of the products should be there. But government has the pressure of revenue. Now with 150 lakh crore rea- realization from GST, they have some space to rationalize the duties on cement. And it will be a very good step as the government is considering it. So we will keep our fingers crossed till the real notification come. It is still under consideration, but that is also a very positive step.
Right. But with that, now taking, as you mentioned as well, February to June, July actually is the main season, right, in terms of infrastructure, cement companies as well.
Yeah.
And this is the peak consumption season that we see.
Mm.
And as you mentioned, that the prices are still low. So
Mm.
to cover up in terms of the margins and to cover up in terms of the overall business, the realization has to improve. So
Mm.
how much price hike that we could be taking as a company?
We cannot take any price rise in commodity
Hmm.
as it is not a monopoly
Correct.
product. So how much the market can give, how much with price rise our market share will remain maintained. So it is a complex process. Every industry wants to increase the prices,
Hmm.
but prices will go up only by market forces. Nothing can be forced on it.
Right. And overall, the central government has scaled up its capital expenditure from 7.28 trillion in FY23 to 10 trillion in FY24. How big a positive, according to it, is, from a capital outlay perspective, from an overall sector perspective?
It is a very positive step for the cement industry, for all capital good industry, and more so for the country because the capital expenditure will create more jobs and more GDP in the future. Yes. छोड़ दे आप आपको खत्म ही।